Hey, it's Maria with Wealth Creation, where we talk about wealth, money, finance, passive income, personal goals, business goals, and how to get you from where you are today to where you want to be in the future. Today, we're going to talk about ibonds because the ibond interest rate changed at the beginning of November, and we have to make a decision about, are we going to keep buying them? Are we just going to let the ones we have ride? What are we going to do? So hopefully the information in this video will help you make a decision for yourself. Before we get started, I need to tell you that I am not a financial advisor or guru. I'm just an ordinary person, and I share what I do to create wealth in my own life. So if you see a video here on this channel talking about a different investment opportunity or business opportunity or whatever, you can bet that I'm doing it, because if I don't have firsthand experience, I'm not going to share it with you. Now, sometimes I will share things that I already did and didn't work out, and I'll tell you about that too. So some of them are past things I did, but everything I've personally done. Okay, also let's talk about investing, because an ibond is an investment. Investing is risky. You have to make sure that you're doing your due diligence. You know that with investments, things can go down as well as go up. So, everything in life is risky, and the really, really wealthy people, they know this about investing, and so they will have a lot of irons in the fire, and they win some and they lose some, and overall their wins are more than their losses. But they understand sometimes that they're going to invest in something and they might lose. With ibonds, it's probably not going to happen because it's government backed. It's very safe. The only way that you can say that you might lose is if the interest rate goes down to zero, which it can with ibonds, because ibonds are tied to inflation. So let's talk about the current rate and what I think about that. So from May to November, the rate was 9.62%. They set the rate twice a year, on the 1st of May and on the 1st of November. And from May to November, it was 9.62% because inflation was super high. Well, now they're telling us that inflation has gone down a bit, so they're only paying out 6.85%. And these are APR, or annual percentage rates, and they're guaranteed for 6 months. So you're basically over the 6 months going to get half of that. Now, just a little reminder that you get it for 6 months from the time you buy it. So if you bought an ibond in October, it would have been at 9.62%, and you're going to get it for 6 months, and then the next 6 months will be the current rate, which is 6.85%. So that's an average APR of 8.235%. That's still better than you're getting out on the market with CDs, with other investments. So I still think it's not a bad deal, but let's talk a little bit more about it. So am I still buying them, and why? I kind of just gave that away a minute ago, but yes, I'm still buying them because for the next 6 months, at least, the rate is still higher than I can get through a CD. It may change, who knows? But right now, I think it's still a good deal. So let's look at some examples. So November rate here on the left-hand side is 6.85%. Let's pretend that in May, when they adjust it again, it goes down, and I have some examples. So if it goes down to 5.5%, your average will be 6.18%. That's still pretty good. And even if it goes all the way down to 1.5%, which it could do, that's a big jump though, we're still talking a 4.18% annual interest rate for the 12 months. Now remember, you have to keep ibonds for 12 months and then you can cash them in. And by the way, I did a really in-depth video on that back in May, and I'm going to link that below. So that's like 30 minutes of talking about what they are, how they work, all that kind of stuff. All right, how does this compare to current CD rates? Let's go over to bankrate.com, where we have some CD rates for November 2022. All right. We have, this is a 1 year for 4%, a 1 year for 4.5%, a 15 months, so a little bit more than a year, for 4.4. And these are the highest rates, if you can just kind of see what they are. The minimum deposits on these, look, 1,000, 1,000, 2,500, 500, 1,000. I don't know what this 0 is about. It's probably not true. And I don't know what this is about either. It's probably not true. There's going to be a minimum deposit. Whereas with an iBond, what's the minimum deposit? $25. So even if you just have a little bit of money to invest and you want to get started, you can still do it for $25. So that's pretty awesome. Okay, so here are the national average. Those were the highest interest rates, but the national averages are, look, 1.16% for a 1-year rate. So if you're looking at getting a CD, I would definitely shop around and try to get some of those higher interest rates, but also read the fine print, because sometimes they have strings attached, you don't know. But look at these rates, still really low. So with my mind, even if it went down to 1.5%, like we showed in the previous slide, right here, you're still at 4.18% per year. So that's pretty darn good. Okay, so STD rates from top banks, 4.5 to 4.75, 2.7 to 4.25, 3.25 to 4.25. So yeah, and I don't know what the terms are on those. So yeah, check out this Bankrate website, and I will link that below also so that you can see what's going on with interest rates. All right. So we just did this one. So how am I playing this? That's the big thing. What am I personally doing? So I am continuing. I'm not maxed out on my $10,000 yet, because I'm an ordinary person. I don't have $10,000 just to throw at this. Plus I do other investments, so I like to spread my money around. So what I am doing is I bought my ibonds in November, the same amount as I bought in October and, September and August, all the way since May. And each month before I buy them, I'm looking at the CD rates, because as inflation continues to come down and they continue to tweak the financial stuff, we might be getting into the area where CD rates for 1 year might be better than ibond rates for 1 year, and depending on what it is in May. Now, I don't think it's going to go down to that 1.5%, but it might go down a couple more points. I mean, it went from 9.62 to 6.85, so that's a pretty big jump. It's like 2.5%, right? So it could go down again. So I am watching CD rates, and if I think I can tie up my money for a year in a CD and get a better rate than what I think the average is going to be for the ibonds, then I'll get a CD instead. And I'll update you on that if I change my mind, because I do share what I'm doing. And so that's how I'm playing it. I'm doing it month by month. I'm looking at it. Right now, in November, I bought the same amount that I bought in October. In December, I'll probably do the same thing. Okay, for more info, let's go over here, because I just wanted to review a couple things about ibonds. This is the TreasuryDirect.gov, the official government website where you buy your bonds. It could be ibonds, EE bonds, treasury bonds. They have all sorts of different things there. But this is a page specific to ibonds, to give you a quick refresher if you don't have time to watch that May video that I did. So this tells you what they are. This is the ibond page. This is the interest rate. This is the how you can buy them, how it earns interest. How long does it last? 30 years, but you can cash it in before then if you want to. You actually can cash it in after 1 year, but from 1 to 5 years, there is a penalty. Here you go. You can cash it in after 12 months, but if you cash it in less than 5 years, you lose the last 3 months of interest. So if interest went like down to 0, I would just wait till 3 months more and I would cash it in, because I wouldn't be losing anything then. So you can use the calculator to see what it's worth. You can also log into your account. $25 minimum and any amount above that to the penny. So you could do 2501, 2502, all the way up to $10,000 in 1 year. Now, paper I-bonds, we're not going to talk about that right here, but those can only be purchased through a tax refund. So you can use part of your tax refund to buy paper I-bonds, and you can do an extra $5,000 a year that way, so you could get a total of $15,000 a year. But like I've said in other videos, you could buy one, your spouse could buy one. You know, if you have a business, I believe your business could buy one. So you could do more than the $10,000 if you had, you know, different people in your family or different businesses or whatever. Okay, then, you know, this is just more information. So in order to buy I-bonds, you're going to just click this link to go to TreasuryDirect.gov. You can either open an account or log in. Once you've logged in, you can buy I-bonds. It's really super simple. So that is how you do that. It's secure. It's a government website. It is not a, you know, like a bank or a personal website or anything. And they even say it's an official website of the U.S. government. Here's how you know, and you can click on that. And because it's .gov and because it's got the little lock that says it's secure, that's how you know, according to them. All right, so that is it for the I-bond update. I'm still buying them, but I am taking it month by month and watching the CD rates and watching other things. And I'm also putting money in another investment, which I've talked about on here, called Novatex. So I am not as excited about the I-bonds as I was in the beginning because this other investment pays a whole lot more money, but it's a bit more risky too. So remember, when you're investing, you want to have some really low risk investments or almost no risk, like I-bonds or bank CDs or something like that. You want to have some maybe medium risk investments, which might be certain securities or index funds or something like that. Now, the markets have taken a beating this year, so my quote safe or low risk or medium risk index funds are actually down about 8% for the year. So you can lose money in those, but I believe they'll bounce back. You know, you only lose money if you sell, remember that. So if your investments are down, just ride them out. They're probably going to come back. And then there's higher risk investments like this Novatech thing that I'm doing. But to be honest, that's the one that's paid out consistently. Well, my other investments have been all over the place. So I-bonds for sure for a safe investment. CDs maybe if the rates come up, and I think the I-bond rate's going to come down. And then these other things to kind of round out my portfolio so that I can get a higher reward with a little bit higher risk. But I also know that I'm more likely to lose money. So yeah, so that's it. I hope you enjoyed this. Again, I've put these links down below in the description. Watch the May video that really explains I-bonds in depth. And as always, here's to our success.